Hello everyone, so you can call this a course anyway. In those two parts, I will show you the basics of volume profile and make sure you watch it till the end. There is so few people on the internet that will teach you this, and even if you type volume profile in YouTube, you wouldn't get the same information or valuable informations. So for volume profile, what's the first question we're going to answer is what's volume profile, what's its uses, and I'm going to teach you point of control and value area, and this is the usage. So we're going to learn why using volume profile to study trends is better than the normal price action, and how we get our support and resistance levels, and what's the theory about it, and how we can get potential targets using high volume nodes. So we start with the what's volume profile. Let me delete this one, and I'll paint it with black so we don't have any eyes problems. Anyway, so this is the normal price. So usually I will show you something. So usually you find people go for volume, and this is the volume they get. So it's volume based on time. Let's say on 8 p.m. we have this huge green candle. On 6 p.m. or 7 p.m. we have this one. So this is volume based on price, I mean on time. So you find it over here. And we have this is useless, we don't use it. And we have volume profile, which is the same volume based on price. So you'll find volume over here based on price. Let's say, let me show you some examples. So this is how it looks like. Let's come back over here. So when there is okay, we just finished the first part, so I will teach you another thing. So this is a normal distribution of volume profile, and we have the point of control, which is over here. For this example, it's over here, which means where is the, or what level there was the most contracts traded. So before we go further, if you don't understand what does volume mean, then if I want to buy something, then I need someone to sell it for me. So if I want to short something, I need to buy it. So this is, if I buy a contract from someone who wants to sell it, then this means one volume marked. So volume is recording every transaction. This is not real volume, this is tick volume, but it's somehow accurate. So let's say 80-90% close or accurate to the real volume when you use futures data. So it works because we're not trying to scalp ticks. We're working let's say intraday for at least 30 to 1 hour trade. So we're not trying to scalp in 30 seconds or 1 minute, or so we need a very accurate volume. Tick volume profile is enough. Anyway, this is the point of control, and the value area. What does the value area mean? So value area means 68% of data. So where 68% of data falls on volume profile. So for me, I took this level from here to here, and it's marked on yellow here. So 68% of data or volume is marked over here. and this is called value area high and value area low. And what does this mean, or what's point of control? What's the relation for price? So price is attracted to point of control. Why? Because basically, if I want to buy something, then I need to find someone to sell me. So if I go for this area, then there is no volume. So if I want to buy, then I can't buy at this level. Maybe I will find someone to sell at this level. So I will buy at a worse price. So this is why I'm attracted, or price is attracted to this level, because there is so much liquidity. And another thing to teach you before we start in, so markets moves like this. Now we have fair value, which is consolidation or rotation level, as some people call it, and we have a fair value gap. So the gap between the fair value is a gap, is a fair value gap. So it's not like ICT told people like this. So let me, so this is not a fair value gap. This is the fair value gap. So what does this mean? It's just a simple pattern to show there is an aggressive move. So if you, let's say, here's what ICT calls fair value gap. This is not fair value gap. This is just a pattern that shows there is a bullish strength move. Here is another one, and you can see that price went up because this is a pattern that shows strength. Let me delete this because I just hate this volume based on time. Let me just, here's another one. So this is just a pattern that shows strength, as I told you. So here's a trend, which is the fair value gap, and here's the fair value, which is the consolidation. And the consolidation is very important because institutions need to accumulate so much contracts. It's not like retail. You click one button and you buy 1, 10, 100 contracts if you're a billionaire or something. And you wait for price to go up and you do nothing else. But for institutions, it's very hard to trade because they need to consolidate their levels, and then they need to fight so they can drive the price up, and this will take so much liquidity. And let's say some people think institutions are chasing their stops. Imagine an institution moving $1 billion just to chase your $5 stop loss. This is this is so funny. Anyway, so as I told you, this is the point of control which price is attracted to because there is so much liquidity, and there is the value area high and value area low, which is this value area is 68% of data, which is one standard deviation in data distribution or statistics. Anyway, let me delete all this. No, come back. Okay. So what's the second thing to study? The usage. So the first thing we're gonna learn is the trending. So as I told you, some people have their market structure based on price action. So for example, they say this is a higher high, this is a higher low, higher high, so we're in an uptrend. But this doesn't always work because some people, let's say price is going this way, and some people think when price is coming to break through this, then price will eventually go like this. So there is a bearish market, but no. Let's take for example this one. Let me delete this so I can show you. Let me activate this one to just, okay. So we can see that price is going like this. No, not this one. Price is going like this. Okay, let's stop over here. So some people, they say, you see this over here? They say, okay, there is a break, of structure. So price will retest over here and then come down, and this is not the case, because if you use the value area, we have, wait, did I just delete? Because if we use the value area, the session value area, so it shows, or the volume profile, session volume profile, so we can see the volume profile day after day, we can see that the value area was here, and the market started to accept higher and higher value area, which means started to accept higher volume profile. And you can see the when there is this drop, normal retail people will go for wait for a retest or a retracement or a correction, then they will go down. But for the value area, it's just still the same. You can see that it's still at the same level, so there is no drop, no shown drop over here. And you can see that the value area after this just went up. So this is how do you know price is going or trending up or down with value area, and it's more efficient than the normal price action. And of course there is another tools to use, so you can know what trend will happen in the future. We'll talk about them in part 2, I guess. So support and resistance levels using low volume nodes. So let me teach you something in the volume profile. So as I told you, this is a normal volume profile or a normal distribution, and there is point of control which prices are attracted to. So price like to stay over here so much, so I can't use it as support or resistance when price is close to, because it acts like a magnet. So the only reason price is coming over here is to find liquidity, so it won't reject it. So it will reject it if in let's say in a very rare cases when there is no liquidity here. So let me show you something. So let's say price is coming back to this point of control, and when it comes back to see if there is still liquidity like the past, and when there is no liquidity, then price will reject it and go up. So this is something let's say you must know. So it's very rare for a point of control to act like a support or resistance. In most cases there is liquidity on those levels, even from 1 year, let's say. So the market do not, or have the market has a very long memory. So this is what I told you, and why the market rejects those edges. So if you find, let me delete this one. I have no scenario, so this is God. So this is why I'm talking like this. I have no ready scenario. I'm just going. Where is, okay? So price is let's say going this. So when you find price come at this level, it will either break through so strong or reject. So I will mark the box. So you will find the price reject or break through so strong. Why? Because there is no liquidity at this level. So if there is a huge institution trying to buy, then when there is no liquidity over here, they won't really try to buy more. But if they want to really drive the price up and they don't find contracts to buy over here, then the price will go up to higher levels. I can't go up. So they will go to higher levels trying to find someone to sell the contracts. And maybe in the future I'll make a video about the footprint so you can understand how market moves, or what are the market mechanisms which most of the retailers do not know. So this is a high volume node, and this is the low volume node when there is no liquidity. So this is why those are the strongest support and resistance levels, and even when there is a breakout we'll wait for a retest and go up. Let's take for example, let me give you an example how to make how you can make support and resistance levels. So let's take for example over here. So I'm going to mark weeks because I like to use the data from a week before. And what do we can see over here? Let me just make the row size less so you can see much better. Anyway, so when there is a high volume node and on the edges there is those cuts in volume, so low volume nodes, those are the strongest support and resistance levels. So using price action or using your eyes, we will mark, you can see that price is reacting to those levels. So I will just mark levels over here. So this is a key level. Another key level, price reacted to over here. So I'm going to drive or to draw another one here, and there is this huge level in here, and I'll do the same here, and there is this one. So even if we extend it, we can, let me just delete those. So if we extend it to the next week, what do we can see? Price is still reacting to it. Price still reacts to it. You can clearly see that price is reacting to it, and you can see that this reverse. And even if I extend it 1 month, let's say, you can see that price still reacts to those levels. So this is how you can get your very strong key levels or strong and resistance levels. And how we can, let's say, classify the key levels. So which one is stronger than the other one? So basically, what's the biggest volume node over available volume node? This one. So the volume or the low volume nodes on the edges will be the strongest levels, and then we have this one. So the second strong level will be over here, and then we have the last one over here, which also very strong. Why? Because when there is a breakout, you can see that there was no retest for this level. So usually you can see price breakthrough, there is a retest and go up. And when there is no retest for the same week, as you can see, then this is a very strong level, and you can see that price even went very strong negative and then switch to this huge bullish trend. So this is how you can classify your support and resistance levels. And what are the potential targets using high volume nodes? So as I told you before, price is moving like this. Price is moving like this. So it's trying to find liquidity from here. There is not enough liquidity over here, and there is another liquidity, so another consolidation and another chance for institutions to enter huge positions so they can profit from when there is the lack of liquidity like this one. So what we can do if there is a breakout from this level, which is a volume profile, so on this node over here, or a small node, when there is a breakout, I will wait for retest, and then I will target the next point of control or high volume node. So why? Because I won't target the edges of this level. I won't target the edges. But I will target the point of control because I know price is trying to look for liquidity. Price is not trying to be rejected at this level because it already break out from this low volume node. So what I will do is I will target the next volume or the next point of control. And let me see, it's 22 minutes. And okay. So for the next or the second part, I will show you one of my positions, and of course I will use more tools than volume profile. So volume profile I use mostly to get my levels, and let's say for the bias and the execution you can use footprint. And that's all for this video. So the next part will be the technical side, where I show you one of my positions so you can get more experience and then start use it yourself. And thank you for watching.